In this section, we're going to go through the reconciliation process. Make sure you have your notes available so you can fill them in as you go through here. It's not always necessary that everything is up on the screen. Some of your answers may be found in the lecture portion of this also, so be aware of that. The reconciliation process, what this is just making sure that your bank balance that you have in your check register matches what the bank has in your account. And this is very important, especially if you don't have a lot of money in your checking account, is to make sure that there's always money in there and that you don't write a bad check. The reconciliation process. As a depositor, you'll need to review the record of your account that the bank keeps. At regular intervals, usually monthly, the bank will send you a report on the status of your account, and this is known as your bank statement. And again, the bank statement is just a report that is sent to you by the bank that shows you a number of things that we'll cover here. Your bank statement shows all of your transactions and bank fees for the month. Some of the things that your bank statement will show you is the balance at the beginning of the month, all of the checks that you have paid during the month that have a return back to the bank, any ATM transactions, EFT or electronic fund transfers or your special payments that you have set up through your bank, if there's any service charges that are attached to your checking account, and if you had enough money in your account to earn some interest. The last thing it'll show you also is the balance at the end of the month, and this is what we got to double check when we do our reconciliation. This is basically what your bank statement will look like. You have your beginning bank balance. This one is a brand new account, so you start with 0. You deposited or you made some other additions into your accounts. You wrote some checks for a total of $533.89. You got charged some fees, and then you have an ending balance. And then they have a summary of the number of times that you withdrew money and the number of times you deposited. And you can take a look at your activity down here. It shows you the days, check numbers you wrote, how much was paid, and so forth. You can see that there's an asterisk by some of them. And all this means is, you can see right here especially, that there is a break in the sequence of your check numbers. So check number 105 is missing. It might not be back to the bank yet. It also has check card withdrawals. You went to the ATM, got $50. You had an automatic payment of $72 and any other deductions like the service charge right down here for $3. And so that's all the information that's shown on your bank statement, and yours might look a little bit different than this, but basically contains the same type of information. When your bank statement arrives, compare the checks you wrote with those that have been paid by the bank. Banks might not return the actual canceled checks that have been paid. Instead, banks can use substitute checks, which is a digital reproduction of the original paper check. In some cases, banks do not return checks or provide substitute checks unless a customer requests them. So a canceled check is one that you've written, it's gotten back to the bank has paid whatever business that you wrote the check for. There are times when you need to show proof of payment. In most cases, information on the statement will be sufficient to prove payment. If the check shown an endorsement is needed, a substitute check is considered a legal equivalent to the original check. Finding differences. You keep your own record of your checking account, usually in a check register. The bank statement is the bank's record of your account. The document created to show how the two balances were brought into agreement is called the bank reconciliation. Bringing the balances into agreement is known as reconciling the bank statement. Again, reconciling the bank statement is bringing the balances of your checkbook and the bank account into balance or into an agreement. These forms are usually printed on the back side of the bank statement. There are a number of reasons why there is a difference between the bank statement and your checking account balances. There might be outstanding checks. Outstanding checks are the checks that you have written but have not yet come back to the bank. For example, you go to Levers, you write out a check today. That check, it takes time to get back to the bank. Until it gets back to the bank and it is paid to Levers by the bank, it is considered an outstanding check. You may have forgotten to record an ATM or an automatic bill payment. Maybe you went to the ATM in a hurry, you took out some money, and you just forgot to record it. The automatic bill payments, they're easy to forget to record in your register. There might also be a service charge that you didn't know of. Maybe your balance in your checking account got below a certain dollar amount and you were charged a fee. Or maybe you just have a service charge for the privilege of having a checking account. You may also have what are called outstanding deposits. You may have taken your check into the bank this morning. It takes a while for it to process in the bank, and so therefore it's not going to be on your statement right away. So again, an outstanding deposit is one that you have made, but it has not been recorded yet in the bank. You may have earned some interest on your checking account, and until you get your bank statement, you will not know the exact amount of that interest. Or there might be errors in your check register. Maybe you added when you were supposed to subtract or whatever. Usually when there are errors, it's usually the person keeping the check register rather than the bank making the errors. Here's an example of a bank reconciliation. You can see that on one side it shows what the bank has, and then on the right side it shows your balance. And you can see that eventually you want the two numbers to be in balance. And again, it just summarizes your account and the bank account, and we will cover this in a little bit. Next, we're going to go through the reconciliation activity, and I'm going to have you fill out the reconciliation form with what we've learned so far. So make sure you find that sheet in your notes. This is our bank statement that we have received, and we've covered the information that is on this bank statement already. We will use this to balance or reconcile our account. What we do here is we're going to compare the bank statement to our checkbook, and you have that checkbook register with you, and we're going to make sure that there's no mistakes in there. Confirm transactions. We are going to check off in the register for each transaction, and we're going to look for outstanding checks and deposits. So we have our two items that we need, the bank statement and our checkbook register. The first thing we're going to do is take a look at our canceled checks. Remember, canceled checks are the ones that have been paid for by the bank. Our first one is check number 28. You can see that it is in your checkbook register, so therefore we will put a check mark in this column to show that this is a canceled check. It has already cleared the bank and has been paid for. Our next one is check 29. We'll put a check mark there. And again, as we're doing this, we double check that to make sure that our numbers are the same as theirs. Check number 30 for $25.15 is right there. We will put a check mark there. Then we will go through the deposits. We have two deposits listed right here that have been deposited into our account. The first one here, $133.20, is located right there, so we will place a check mark to show that it has been deposited into our account. And the one for $133.20 on the 22nd is right there, and we will place a check mark there. With your bank statement, you'll get a reconciliation form. This form is used to help you find any differences between the statement and the check register. On the left side is your statement column. On the right side is your checkbook column. In your statement column on the left side, you'll have such information as the balance from your statement, deposits not on your statement, your total statement balance, checks not listed on the statement, your total checks, and your statement balance. On your checkbook side of your reconciliation form, you're going to include things like your balance from your checkbook, deposits not in your checkbook balance and deposits, fees not in the checkbook, if you've earned any interest, and the total fees and interest, along with your checkbook balance.